SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. It's Friday, end of the week for traditional markets. Obviously we don't have that luxury with crypto, so we'll see what happens over the weekend. At the moment, so let's put it into context. Oh, and before I start, I've got my 3-year-old now sitting behind me on a tablet, so there might be some Peppa Pig emergencies I need to attend to throughout this small video. I'll try and keep it small because basically what it is that we're seeing now is the pullback that we've been ever so patiently waiting for towards that 21,500 area, that box, that major box, which was also backed up not just from a horizontal perspective of previous supports and resistances, but also the 200 exponential on a daily, which is sitting just above, and we ever so slightly front run that, so that's 21,551. But if we take it to a 4-hourly, we can see that actually we were tagging the 4-hourly 200 exponential and simple, which is basically where we tried to bounce from, so 21,600. So supports below us in the form of moving averages and boxes of significance, but direction is still to the downside at the moment, I have to say, because look, if you focus on what we see on a trend basis now, we're below the Bollinger Band center. You can see that it was a very clean rejection right from the center of that. So with the Bollinger Bands pinching tightly yesterday, we came up to retest it, and then the rejection took place from it. And so what we should, if anything, expect really now would be, I suppose, maybe we come down to that 21,500, and we could find a bounce around there. Maybe to, well, I would say on the first pass, there's 21 exponential on the daily, which sits around 22,400, just lower than that. I'm not trying to be pessimistic here. I'm just saying that there is a trend that has broken towards the downside now since we closed below there, well, 2 days in a row and got rejected from that Bollinger Band center. So the odds are in favor of further downside. And that doesn't mean it doesn't come without a bounce. You know, we could have a significant bounce all the way back up to, we'll say 23,000 if it were to happen today. And to be honest, you know, a move of that size would be a bullish engulfing candle most likely and have continuation. But until we see something like that, the best way to try and play such a large move that's taken place, because it's the biggest candle we've seen in, 3 weeks or so, the best way to look at this would be on the shorter term timeframes, like a 4-hourly, because this will give us a bit more of an insight onto the trend, whether it's going to strengthen or break. And what I mean by that is things like this 10 exponential, which proved to be a devastating blow yesterday. Kapow, also again over here, kapow. This is where the fight is going to be fought right now. So we've got these moving averages here. We've also got these steep moving averages here, and we'll be looking to see if we can reclaim these. So to be fair, it seems likely that, you know, throughout today we will have a move up to well, we'll call it 22,150 or lower, depends on when it does decide to do it, and get rejected from there. And effectively what we're seeing is a symmetrical triangle form between these moving averages, really. This, I suppose it's more of a descending triangle, which again is obviously a bit more of a bearish formation anyway. And we'll be looking to play out the price action within this triangle and decide which way it wants to break. And it will probably choose, to be honest with you, to break today because it's quite a small formation. You don't have much time for this to break. So it would likely choose which direction it wants to go today, whether we continue up or down. I say today, like between today and tomorrow, the next 24 hours or so from now. This will have broken one way or another. But again, you know, because we're below Bollinger Bands on daily and 4-hourly, and this is a bearish formation, it is more likely to break down. But it's, you know, only to the tune of like 65% more likely, but it is still more likely to break down from this area. Even so, right, we've been waiting for dips, and the first major opportunity for a dip was to come down to this 21,500-ish area, whether you go for the box or the moving averages. It is a strong support, to be honest with you. We can go down a little lower, like I say, to that 21,500 flat zone. And it's still a strong support where basically we would see, well, this is the first time we've seen a golden cross retested on the 4-hourly. You know how I feel about those. For the most part, this is a buy the dip opportunity. Yeah, we got golden crossed all the way back down here and then basically ran We touched the 50, we touched the 50 again, we've broken down below it. So this is a buy the dip opportunity for those who want to try it, obviously. I'm not saying that it will work. Like I say, we are still more likely to go down further, but golden crosses get retested, and this is the first time it's happened, so that is a strategy that can be employed. And if that's the case, then fine. We'd also be looking for a breakout of the RSI as well. And we've got a trend form, which has gone down quite low. Same with the money flow index. It's all gone down quite low. There's no bullish divergence on this, so there's not any of that we could get particularly excited about. But if we were to see a candle body break and close on the 4 hourly above that 10 exponential, which is again sitting around that 22,200-ish area, with a RSI breakout of momentum and a closure, then I think there is a good chance that we have a bigger run back into the bottom side of this current range that we've been floating around in, which is above 22,700. But again, you know, expect rejections all up until these areas. Closures above, we'll call it 22,000. Well, I mean, it's all descending, isn't it? These trend lines, these moving averages are all descending, so that, you know, by the time you watch this video, it might be later on today or maybe even tomorrow, these will all be much further down, provided we're below them. But yeah, we'll be looking for rejections on each one of these at the moment, and maybe we could think about the triangle formation as a bit more of a broader one. And if that's the case, then we'd have a little bit more time to play this out, maybe throughout the weekend. We'd be talking up until what, some point early next week before this formation resolves itself. So we might end up in a formation like this for now until Monday, Tuesday or whatever, and then it decides to break one way or another. Either way, statistically it does want further downside, but if you're looking to get into a position for Bitcoin specifically, but other altcoins I've had a look at, and they're more or less forming the same kind of opportunities, 200 exponential golden cross retests basically. If you're looking to get into a position for a long-term position and just hold for the duration of this bull market, this would be the first opportunity to deploy some capital, I suppose. But remember, if you're going for the long run, you have to be prepared for the noisy volatility of the daily price action, right? You'll be up, you'll be down, you'll be sideways, but overall it would say that this is the first opportunity for buy the dip. Not the only, but the first. Obviously, we recognize that it's 65% more likely to continue going down. And if that is the case, then I'd say the next major area is about 20,500. But it depends on your strategy, depends if you're trading or if you're investing or what. For me personally, I picked some up when I saw the price action here. I thought might as well. Because, you know, I'd have no problem holding Bitcoin because I can always swap that for altcoins when the market picks up and double or triple or God knows how much increase my amount of Bitcoins by doing that. So it's okay for me to say it quite blasé like that. It's trading Bitcoin to altcoins is a trading strategy unto its own, so it's no big deal. But, you know, if you're a bit more cautious, then yeah, obviously, you know, do whatever you feel is required. But this is the first time we've touched the 200 exponential since this major breakout, since all the way back down here. And so it gives us the first opportunity to either buy this dip or scale in. But again, there's no guarantee with this. In fact, if anything, we should, to be fair, expect it to come down a little lower anyway. And the bounces, like I said, could be pretty anemic, but there is a chance of reversal, of course, because we see these golden crosses get retested frequently, and that's where the V-shaped recoveries take place from. So just before we go leave it for the day, let's have a quick look at the rest of the world's trading situation. So we did get that first rejection on the euro yesterday from the 21 and the 10. So just as we are expecting a bounce from these lower moving averages like the 50, which we got exactly to the tick, we've got a rejection now on these moving averages exactly to the tick. We're not going to bother looking at the Dixie today because the euro gives us all we need to know. And so with that said, now we're probably looking for a bit more downside on the euro, maybe back down to the 50. And look, if we come down there and we close below there, we are going to get ourselves a golden cross retest on the exponential moving average on the euro, which is the ultimate buy the dip for the markets, all markets. Sweeping statement, but this is what we've been talking about since we got the golden cross all the way back over here. We've been waiting for this, and that's where we would do it. If we fall below there, I'm afraid what we're facing is just it was just a bear market rally. It was nothing more than that, and this is where we would see things get particularly nasty. And there's not much point in talking too much more about the euro. You know my vibes, you know my feelings on that on a fundamental basis. And the technicals would also suggest that, yeah, this is an area where we would have a decent bounce from and continue. So where technicals meet the fundamentals for further upside and a decent run, maybe to a new high on the euro. But for the moment, the technicals are suggesting that just similar to Bitcoin, we've had our bounce, we've had our rejection. We're going to fight this area out. And there's no reason to expect either one of these to break more than the other, because we have been waiting for a sharp rejection on the euro, and it does appear that we got that. And we'll just see how this one plays. It's decision time, really. Last thing I'll show you will be the S&P, which again rejected from the area exactly as expected, and we're coming down to find our first level of support, probably just above 4,000. I'm bullish on the S&P, provided we are above 4,000. We broke out outside of this giant descending bear market trend, and we're outside of that now. We are approaching a golden cross on the exponentials, already received one on the simples. So trend strengthening to the up, but that doesn't mean we go straight up to new all-time highs. It could quite easily mean retests of these lower zones. So 4,000, I'm bullish. Below 4,000, I'm skeptical. Back inside the triangle, I'm worried. But for the moment, just like the euro, just like Bitcoin, everything is moving together, which is good. Which means that at the moment, the overall trends are still up. On the higher term timeframes, they're still facing up, which means we should expect continuation up over the long term, provided these areas hold. So S&P 4,000, Euro 105, Bitcoin 2,500. These are the areas where things would change significantly, and we can talk about much deeper, maybe even retest of the lower zones and catastrophe. But until those areas are seen, there's no reason to suggest huge continuation. If anything, we probably have small bounces today, small rejections today. Maybe we just continue with a bit more of a constructive consolidation over the next week or two. And that would be felt across everything. But like I said, there is criteria for further upside, just as there's criteria for further downside. And again, for Bitcoin specifically, because I know that that's what we all want to talk about, the criteria for further upside would be closures back into the bottom side of this range, about 22,700 would call it. Closures on a 4-hourly above there is likely to probably just drag ourselves back into this range, and then we'll just get back into the swing of things really and see where we go from there. Not massively bullish. I'm not massively bearish. We have waited for this. We've now got it. So let's just see how the dust settles. And like I say, I did buy this dip for Bitcoin specifically, nothing else, just for Bitcoin. And we'll see what the rest of the day and the weekend and next week has to offer. Now, I do have a Patreon live stream tonight, so feel free to join. There's links in the description below. Otherwise, I hope you have a nice day and a good weekend. I'm not probably going to be able to make many videos over this weekend. I'm having a romantic getaway for 2. And I actually won't be back till Wednesday. So until then, I'll wish you all the best, and I'll see if I can squeeze some videos out on my crummy old Lenovo laptop. Thanks for watching. Take it easy.